Welcome to the night where we light up the spark. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dollar shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the motherlode.
Whoa, what's going on, everybody, and welcome to Markets After Dark, where we go mad on the charts. I'm Lunar Beaches Crypto, coming to you live right here on the Piper Academy Network Sunday through Thursday, 11 p.m. Eastern Standard Time until about midnight or later. We filled the CME gap, guys. We filled the CME gap. So we took back all the gains and more. And now we're kind of stuck. So what happened? Well, plain and simple, as Piper always says, it's the economy, stupid. He doesn't actually say that, but he might as well say that. You know, you can only pump crypto so much off of news. But if you don't have the macro environment to back it up, I don't know. Anything can happen, of course. This is crypto. We can see more upside, or we can reverse from here. Who knows? I'm going to go over a scenario that I did see on X. Somebody compared where we are now to a certain point in 2020. But I'm going to tell you a little bit of the difference between the two that I think is significant, at least in my view. But who knows? Trump tariffs go into effect at midnight in 1 hour. So that's part of that macroeconomic stuff. We also have the GDP now indicator sitting at minus 2.8%, down from plus 3.9 not that long ago. Minus 2.8%. Not good. It's not good. Economy is contracting. We did see the ISM. We had the manufacturing PMI come out today. Came in under forecast. Still above 50, so that shows some kind of growth. But not good enough. Not good enough. But we do have other numbers coming out later this week that could totally flip the GDP Now indicator. Because the GDP Now indicator is very volatile, because whatever the latest news is what weighs the indicator the heaviest. So the indicator itself is pretty volatile, and it could flip on a dime. But anyways, it's TA Tuesday, guys, so we're going to be doing a lot of the charts tonight. So let's just go ahead and bring you guys up. How's it going, everybody? How you doing? Why is the display coming up? It's not supposed to come up. Get out of here. Bye-bye. Let's bring up the beautiful chat. Oh, I already did. Brought up the beautiful chat. What's going on, everybody? How you doing? We've got, let's go ahead and say good evening to everybody. Good evening, RS Miller, showing up as always. Good evening. We crashed. Now time to go to boom to the moon on a dime. Maybe, or more sell-off. Alexandra G, the mod queen in the house. What's going on? Thank you for throwing that Piper Academy Discord link in the chat, pinning it to the top of the chat. Guys, join the Piper Academy Discord. We talk about all this macroeconomic news, and you know, if it's not the puppet masters pulling the puppet strings or the unicorn fairy dust or whatever, it is definitely at least the macro environment that controls this market. We'll get into a little bit of that too. So we also have loss on crypto or crypto gains. What's going on, brother? How you doing? Kasim, what's going on? Good evening. Good evening. All set in the house. What's going on? Buck, take it off, baby. Yeah, I took my jacket off. I meant to take it off pre-stream, but kind of rushed upstairs to my office and hit the go live button. Those Canada tariffs go into effect today. That might move things. Probably I don't know if that's a positive. I guess we'll see. At least not at first. I'm turning into a bear, says RS Miller. It's probably not a bad time. Army Piper in the house. Sir, are you not on a cruise right now? What are you doing? Enjoy yourself, man. He's got to show up so that he can say, I told you so. I told you so. I told you. We got to be careful with the pumps. I look better tonight. You are looking not looking too green, I assume. I don't know why I was looking green. I might look green when we go to the chart. Who knows? But day one of cruise down, bro. Oh, so you're just chilling up in the cabin? Piper's chilling in the cabin, taking a look at the markets, seeing what's going on. Everything's good. Nope. Wish I was wrong. Let's see. I mean, yeah. Anytime you get a pump especially a pump that's off of news, let's just go ahead and bring the chart up. Especially one that is off of news, it's kind of one that you can't trust, even though the news is more long-term, at least bullish. If it even happens, they're going to evaluate the strategic crypto reserve. But for some reason, I got this thing in my mind that says they're just going to start name dropping cryptos left and right that are going to be in the reserve so that they can pump their bags and hop out of their holdings before ish really hits the fan in the economy. I don't know. Just got that feeling to it. The question is, can we break back to the upside? Well, of course we can. It's just going to be very difficult to do so. If the announcement of a Trump reserve, or not a Trump reserve, but of a crypto reserve can't pump markets, can't sustain, then it's not good. Now, coming over here to the CME gap, this is part of that thing that I wanted to show you guys that I'm sure you're going to be seeing if you haven't already seen it. I'm sure you're going to be seeing it on the social medias. So I just want to talk about this because I got a feeling that a lot of people are going to be looking at this and thinking, oh yeah, that does look very similar. So you see we came back down, we tapped pretty much almost filled this CME gap over here in the 70Ks. But the thing that I saw on the X was somebody said, you are not prepared for what's about to happen. And that's because of this. This little move right here. And They drew a nice little box. And they're like, hey, this looks similar. So that's exactly what's going to happen, right? Let's go ahead and do a side-by-side so we can look at this properly. Let's do a side-by-side. Any day now. No, why would I want Netflix? BTC. One. And yeah, it's okay to get excited. Good night, Buck. Hope you have a good one. Yep, we'll see you tomorrow. Go to sleep. Go to sleep, old man. Yeah, I said it. Log scale. That's on the 2-week. We're going to go to the daily. We're going to, not that one. Turn off this SMA here. Not concerned about that right now because we're just looking at this. All right, so this is what they are looking at, right? So they say you are not prepared for what's about to happen because you get a consolidation range, right? Consolidation, you get the breakout. Mind you, this is symmetrical triangle, while this is more of a bull flag. But you do get the same little breakout, and then you get the back test into the CME gap. Breakout, back test into the CME gap. As far as I'm concerned, that's the only similarities. The only ones. I mean, a little bit of topping structure in here is pretty much the same. Down, up, one more little high, and then you do a 3-wave structure to the downside. Up, down, one more little high, and then a 3-wave structure to the downside. There's your similarities. Okay? Pretty similar. But what's the difference between these two situations? I'm not saying that this can't happen, but something was going on during this time. Does anybody know what was going on during this time? Does anybody know what was going on during this time? Now, people will say, well, this is a similar situation, right? So why can't we do the same thing? So what was going on during this time was C19. Economy was pretty contracted. It was, stopped 2020, R.S. Miller. Good night, Piper. Hope you have a good evening. See you tomorrow, brother. Yeah. So even though the economy was not doing anything, literally, pretty much, basically, virtually, not doing anything, we had the COVID stimmies. That's the massive difference between this and this. We had money printing, quantitative easing, whatever you want to call it. We were getting money injected into the markets. Okay? The major difference, we printed probably more than, more than 50% of the money supply at that time. And then I think his second one, and then Biden's continuation on the third one, made it to where we actually we doubled the monetary supply in a span of like 18 months. So that's a glaring difference to me. There was plenty of liquidity to be had. Where is it now, today? Where is it? Where's the money going to come from outside of the stock market selling off and then everybody putting their money into crypto? Could that be the case because of this whole crypto reserve thing? Maybe. And I think that's our hopium. But that's all it is at this point in time, is hopium. We want to, dates for what? You're going to have to be more specific. LOC. On lock. I don't know what I'm doing with my hand here. Speaking sign language, apparently. So, because we have the lack of quantitative easing, lack of liquidity injecting into the market, it's going to be difficult for this to happen. This stagnation, which is possible because of the tariffs, but I don't know. We need to be cautious, okay? Because this could just all fall apart at any moment due to the lack of liquidity in the market. So let's take down the side by side because I'm done with that part. And let's go over to today. The dates are June through August of 2020, pretty much. Romantic dates. COVID, quantitative easing. Yeah, exactly. Let's see. All right, so yeah, this is what I wanted to show you guys tonight. We're going to do I want to get into a lot of charts, but right now, Bitcoin is still king. Bitcoin is still king. So we have to do a nice breakdown of Bitcoin. All right, so I want to take a look here at our bull market that we've had so far. And I do want to point out some things that could be positive potentially, or more of just saying, hey, this is normal. This is okay for now. And as of now, we are still fine when it comes to the bull market. But we are teetering on the edge of that just not being the case any longer. So the first thing I want to do is I want to just get the basic market structure here. We take out this high over here, right here. Then we get a pullback, and then we push up. This whole range right here, I consider as just like one range. I'm not going to go up, down, up, down. No, we're going to take the high, and we're going to take the low. We're going to go to the next high that closes above a significant high right here. We're going to get the pullback, and we're going to do that and that. And I'm just going to put this in here just to put it in here, okay? I just want to put in a low in here. This doesn't mean we're going to go higher. I just want to make that a pointy thing. You know what I'm saying? I want it to be a pointy thing. All right, so we're going to take our Fibonacci extension, and we're just going to pull from low to high on each of these. So let's go low to high. What do we get? 50% retracement. Let's go from low to high. What do we get? 50% retracement. Let's go from low to high. Surely this one's not. Oh, that one's a 50% retracement. Okay. Surely the last one isn't. Oh, what is that? A 50% retracement almost to the dollar. So what does that tell you? What does that tell you? Tells you things are still normal as of now. This is a pullback in a bull market. Now, the economic data is definitely a cause for concern, or at least caution. And you should be cautious. We should be cautiously optimistic until we have reason to not be. Okay? Which, given that this is Trump tariff week and non-farm payroll week, things could get really bad really fast. On the other hand, we might just be going to fill the rest of the CME gap. We can go back to that chart real quick. We can see that we have just a little bit more of that CME gap to fill. We did not get it completely filled. This one right here from back in November, the one that was created off of the Trump election pump. There we go. You can see that we did take out. We already measured this out yesterday. It's about 70 to 71% of the gap, but that still means that we have this much of the gap left. The bottom of this gap sits at roughly, well, I can go to this high over here, $77,930. That is on the CME futures chart. The low is 78,675. So we still have that little bit that we could come back and get, if not even more. So we'll see. I'm only turning into a bear because it's 33 degrees outside. Facts. Man, the weather is just absolutely atrocious here. It is 35 degrees Fahrenheit. I'm American, so we do Fahrenheit. 35 degrees like in the morning when I'm leaving for work. And then by noon, it's 60 or 65. Ugh. And then we'll have days where it's like 40 in the morning, but it doesn't get higher than 55. It's just terrible. Terrible. That looks like a complex head and shoulders pattern now that you did that. Complex head and shoulders pattern. We're getting into complex theory. Let's take a look at it. Complex head and shoulders. I don't really trade patterns, so you'll have to forgive me for my ignorance on a complex head and shoulders. So it's got two heads. That's what it looks like to me. Let's go drop down to the daily. Let's go to the Coinbase chart. Let's see. What do we got here? Complex head and shoulders, reversal patterns. It's just Oklahoma weather right now. Yeah. I mean, I don't know. I don't really see the complex head and shoulders in here. I mean, maybe right here. Let's just go ahead and draw this out. Get rid of this magnet. It annoys me. Up, down, up, down. This is like a extremely complex head and shoulders pattern. Break down, then your bearish back test, and then your continuation to the downside. And we do have a fair value gap here on the daily chart. Sitting right here. Nice little inefficiency down here that we could come down into. The low side of that being $70,500. And of course, that would fill the CME gap as well. And this is a bearish back test. So, I mean, all signs point to probably going to see this continue to the downside. Unfortunately. We'll see. We'll see. This is looking worse. We were looking good yesterday. This is looking worse. Money flow is thicker now in the red. Excellent. Our trend ribbon is below the zero line. Shout out to Chart Prime, by the way. There's a Prime Oscillator Pro Plus here. Check out Chart Prime. Link in the description down below. That's 45% off your first month. Are we going to pump, then dump, or just go sideways, then dump? I can't predict the future, my friend. I can only give you the probabilities of where I think we should be going. I think based off of the pattern, based off the bearish rejection it kind of says that we should see more downside. Let's let me put this on standard. Was 786 right here? Oh yeah, nailed the 786. Look at that. And that's typically where you would get a push off there. Let's see. 1, 2, 3, 4, 5. So that would be a 5-wave crashing structure. And that would definitely complete the 5-wave crashing structure. So yeah, I mean, it's looking like more downside. It's looking like more downside right now. So it is what it is. You gotta take it for what you gotta take what you get, and take what the market gives you. Should have taken profits yesterday. Yeah. It's acting like a bear market. A little bit. I mean, we've been talking about this being a topping type of structure in here for the past couple months, really. We thought that we would get a third push to the upside, but I mean, everybody that's been watching this channel or watching this show for the past couple months has seen the Wyckoff distribution. I don't know where it went. Well, I'm not gonna short support. We don't short support, okay? And we are still technically at yesterday's support, or at the weekend support. We're at the lows, okay? We're at the lows. We're at support. If we are to be supported, but it's looking like it's not looking good. What was I? I forgot what I came in here for. Swing ranges, visible. What did I come in here for? Oh yeah, Wyckoff. So time left. High, low. I don't know. There we go. Oh, nuh-uh. Oh boy. Oh boy. All right, so and there it is. This is what we were calling for a couple months. It didn't quite play out exactly how we were thinking it would play out, but guys, I mean, it essentially is played out. I mean, the same rounding top played out, right? So, I mean, I think if you don't give me that one, I think you're being a little uncharitable, okay? All right, because we were looking at this for quite some time. And yeah, I had thought it invalidated. I said, I thought coming down would actually be more bullish long term. Like instead of breaking to the upside and then heading to the downside. And that still could be the case. That still could be the case for sure. But as of right now, yeah, it doesn't look too good. This does look very distribution-y. I know that's not a word, but work with me, people. Iko, what's going on? Jay Violet, how you doing? Kelly L, how you doing? Are you a pattern trader, LBC? No, typically not. Typically not. Sometimes it does depend. It depends on the pattern. I don't like trading symmetrical triangles. I don't like trading. I mostly, when it comes to patterns, I'm not looking for them when it comes in the middle of ranges. I'm looking for pattern like reversal patterns. I'm looking for Wyckoff distribution or Wyckoff accumulation at tops and bottoms, and head and shoulders and double bottoms and triple bottoms, stuff like that. But like your bull flags and your symmetrical triangles and your harmonics, which is useless. People use it fine. If you can make money using the harmonic stuff, fine. But you really don't need anything more than supply and demand. And this is just simply, and a little bit of economic news or data, not news, but data. And yeah, that's a pretty good recipe. Now the question is, I mean, we spent 6 months in this freaking range here. Are we going to close below this range? Are we going to take out this range after spending 6 months within it? I don't like how easy patterns are to get wrong, but I'm no pattern expert. No, that's right. I mean, that's the thing. Like patterns, well, I mean, there's nothing inherently wrong with trading patterns because, I mean, even if a pattern only plays out, let's say, like a symmetrical triangle, let's say it only plays out 50% of the time. Okay, so you lose half your trades. That's a pretty killer win rate if you are using proper risk management. Because you can be profitable winning 20% of your trades if you have the proper risk management. Don't recommend it. I would try to find, something that's a little bit, that has a little bit more win rate, a little higher win rate. But still possible. And a 50% win rate is not terrible at all. But you've got to know what you're doing with the patterns. So, but Bitcoin does like to, especially on like a more macro 4 hour and above, you can find plenty of patterns to go off of. I mean, this is the daily. If I just take in all the lows, I want to get that low. And I want to get these lows in over here. I want to make sure the line is touching all of those. And then I'm just going to take from top to this wave bottom. I'm going to take this wave right here. Then I'm just going to go to the breakout. And if you would have, let's just say, bought in where it broke this trend, which was over here, it did come down a little bit lower. But if you would have taken the breakout trade here, you are looking at for a full measured move, you're looking at a 45% gain. Now your risk is going to be up to you. I recommend not risking more than 1% of your total account. So if you have $100 in your account, you don't risk more than $1 for the trade. That means when I say risk $1 for the trade, that means you either put it on 100x and put $1 in at on a $100 account, or you put you buy it on spot. You put the whole $100 on spot, and you just put your stop loss at 1%. You only want to risk 1% of your account per trade. You can have multiple trades open, but only 1% of your account per trade. Not financial advice. It's just, it's good for you. It's proper risk management, in my opinion. Another thing that I have found that I finally figured it out, is how to figure out your leverage based off of the stop loss, the percentage on the stop loss. Now on this one, my stop loss would have been tough. I would have waited for confirmation that we not only broke this, but kind of held the pattern. And I would want to include this high over here because I want to touch all of these tops. And now I get a breakout, and now I get a back test that nails that resistance and flips it into support. So if I just wait for the back test and I enter on the back test, now all of a sudden my stop loss is even better. I can put this thing anywhere, essentially, and it's not going to get hit. because I waited for the confirmation of the back test, the breakout, the back test of the breakout. Hold, price holds. Hey, let's open up along and see what happens. You get the push up, you get the pullback, and then maybe now we can add to our position here if we want. Personally, since we broke out of the range and we pushed up and we back tested and we broke that high and the range high, it tapped it. That would be, to me, especially after this candle comes up in here and engulfs this bearish candle here, comes up and engulfs it, I'm probably adding to my position here. I got in here on these closes, somewhere in here in these closes. Then I add to my position here after I get confirmation of the breakout. After we break the high, once we break the high, I wait for a pullback. And then I wait to see something bullish happen within that pullback. For that, it is this daily candle coming in and engulfing the previous two daily candles. Then we can also throw a fib on here. Fib retracement. We're going to go from low to high. And it nails the 786 and pushes off of it. So that's a typical bounce zone for Bitcoin is the 786. Specifically off of the very last low before the wave that broke the high. So I would go off of this low here. This looks like it's probably about a 50%, maybe even a golden pocket pullback. 50% right there. That's pretty bullish. If you can hold the 50%, push higher, come back down, comes back down to the 382, and then pushes off of that. So lots of confluence in there. We also have our oscillator flipping, our money flow flipping green in here. We have our pullback on our trend ribbon. We got the flip to the green in here. So even adding in here or even opening a position in here wouldn't be too terrible because we did flip green on our trend ribbon, on our money flow, on our Truth 7, and on our volume matrix, all in that range. So would have been a good time to get into a long. Now here, and we were talking about this last week, I said if we, break out, actually, this was a symmetrical triangle. Go down to the 4 hour so we can see this a little better. So we had this drawn out, and it just freaking nailed it too. I'm kind of kicking myself for not taking the short, to be honest, because it's a perfect breakout back test type of deal. But with all the chaos surrounding the whole crypto reserve thing, I was a little sketchy. I really didn't want to hop in on it. So with these, there's two ways to do a symmetrical triangle measured move. You have the more conservative approach, which is just taking the range. Actually, what you want to do on the symmetrical triangles, you want to bring this out and you want to line it up with the longest end here. Okay, so whatever the longest end, if it's on the top side, you'll take it, you'll stretch the bottom out. If it's on the bottom side, you'll stretch the top out. So we stretch the top, come up in here, we want to go from end to end, close that gap with our trend line here, and then would take that from the breakout or breakdown. It's still considered a breakout, but either way. And we can see we nailed that measured move. Now on the secondary one, I was even saying before we broke down here, I was saying over in here, and I said I would look for a back test of this support a bearish back test of the support before going short. It took us a little while, but we did finally come back and back test it. And that's why I'm kicking myself for not taking the short. But, you know, we can't catch all the trades. Second way, or less conservative. Actually, I'm going to take the low here. I'm going to pull this aside. This is the easier way to do this instead of doing some weird angled measured move, because you still get the distance. So I want to go from the top here down to the bottom here. And then now this is going to be my new target. And look at that. It came all the way down to it. It actually took it out. That's interesting. That's interesting. It actually took it out. So it took the measured move, but this was the bearish backtest. But you take it from the wherever you broke out. And even then, I mean, we'd still have a little bit lower to go if this is to play out. We shall see. We shall see. There's still plenty over here to our left that we can get into. Alexander, it's not that bad. Oh, what's going on, Melissa? One Love in the house. What's going on? I hope you're doing well. Melissa, round trip. Yeah. We round tripping. We be round tripping up in here, bruh. Not good. Not good. Shirts. You taking shirts now? Shorts? Well, it's a little late to be taking shorts unless we come down and we break this low. We break this low, and then I'll probably start looking for some shorts again. And that's about all there is to it. We do have a 4-hour fair value gap here. It's actually got a fair value gap on a fair value gap, which is actually called an inversion fair value gap. And we came right down to the top of that. Interesting that. But our trend ribbon is drifting below the zero line. So is our true 7, and our money flow is thick in the red with our volume matrix coming down and our power bar, bearish power bar, starting to light up. So it's not good. Any kind of LBC, send it lower. Okay, I will. Don't worry. I got you, fam. Any sign of tariffs or any announcement of tariffs being lifted for any reason whatsoever, that's what we'll get. Maybe not such a straight line up, but I think that would be. I think the markets would take that as bullish, or we could just see way more volatility and more chop because of the uncertainty of the orange man. We don't know if he's going to do the the tariffs or not. I mean, they're definitely going into effect tonight. The question is, are they going to maintain them or not? That's a $1 million question. What exactly are we looking for out of Canada? I mean, honestly, I don't know. I know why we would want to impose 20% tariffs on China. Canada? Honestly, don't know. I don't get the Canada one, to be quite honest. Oh well. Wait on the buy, AG. I agree with LBC on more down. Yep, I'd be patient. Unfortunately, I would be patient. Anything else that we can look at that may be showing us some indication of more downside for Bitcoin? Our Bitcoin dominance has been revived a little bit. So we have people coming more into Bitcoin, which is typically more of a safety trade. Just means we could be seeing more downside. Why did my Dixie come down there? Now, historically speaking, the 106 level for the Dixie is the significant level. We want to get below the 106 level to be more on the bullish side. And of course, it's been on the 106.14, 106.15 level, bounced off of that a few times. So it's holding it up as of now. But we do want to see that come to the downside. We did have our PMI. Good night. He's obsessed with tariffs. Yes, he is. Thanks all set in LBC. The tariffs on Canada is explained in detail in the documentary Canadian Bacon. Oh, good to know. Thanks for sharing that. Law Brecca. Appreciate that. I need to write that down. Of course, I don't have a pen because I do want to check that out. What's it called? Canadian Bacon? I think I can remember that. CJ. He's delusional, CJ. Wait, who's delusional? CJ. Trump looking to break Canada down and make them the 51st state, which is crazy. Straight vaping, CJ. Okay. Canada will never become a state without a fight. Oh, that's for sure. That stuff is so wild to me, bruh. 51st state. 51st. I know we'll do that in a second. Squirrel. Let's see. So today we did have the ISM manufacturing PMI come out. This is what I was talking about in the opening. Our forecast was 50.5. We did come below forecast, so that's not good. Our prior was also 50.9, forecast 50.5, actual 50.3. It just shows a weakening economy, a contracting economy. It shows that growth is slowing. Technically, above 50 means we're still growing. However, the trend has been to the downside. Let's take a look. So we had 50.9 prior, then 50.3. And actually, we had gone up for 1 month. For February? January? February? March? So this is going to be January's data that was released in February. Okay. And this was February's data. Man, it's not fair. It's not fair. We were 2 days shorter than every other month. We didn't get 2 days. Oh, man. We didn't get 2 days. That could have been the difference between this one and this one. Come on, man. I don't know. Consumer confidence for China comes out in a little over 10 minutes. But I don't see anything for Tuesday on the economic data. We do know that there is some announcement coming tomorrow. I say some announcement. During the presser today, Trump mentioned something about, somebody asked him about Ukraine, and he said he'll go over that tomorrow night. You know, tomorrow night we'll go over that. And I think he was referring to his tweet or truth today that said something about what did it say? It said something like, I sent it to my friend because I was like, it's funny how he said that. Oh yeah, he said he's going to tell it like it is. He said he going to tell it like it is. He going to tell it like it be. He going to tell it like it is. Tell us like it is, Trump. That's such a funny way to say something, but he going to tell it like it is. So now, yesterday we were talking about how today, we could see the downside or sideways. We were thinking sideways or downside. I said we want to be cautious. We don't want to jump into anything. We got this huge CME gap, like a $10,000 CME gap, but it got filled today. So is that enough to turn things around? I don't know. But we'll see. Tuesday might be a boring day or more sell-off. I just don't see, barring some kind of something, white swan or something, I just don't see anything significant happening. But Wednesday, however, maybe even beginning tomorrow night, we could start to see some movement in the Asian market, maybe even at the close of tomorrow's stock market. I'd be watching that. I didn't go over the stock market. We had a nice sell-off today as Trump was speaking about tariffs, so that tells you what the market thinks about tariffs. But what do they know? ADP employment change on Wednesday, definitely going to be watching that. Just more economic data. ISM, this is more manufacturing stuff, so that'll be important. The ISM services PMI will be ever so more important than anything else that comes out on Wednesday, other than I think there's usually a non-farm something on the Wednesday, or that's what it is. ADP employment change. So not as high on the importance, but it's of medium importance. Definitely want to watch at, this is central, so at 8:15 Eastern Standard Time. We are in a very data sensitive market. A very volatile market. It's actually a trader's market, believe it or not. An intraday trader's market, because there's movement. There's things are moving around. The question is up or down. I didn't try to do that. But when I had it in my head, I was like, I'm going with that. That's awesome. I smell a recession coming. Yeah, I mean, the GDP now is forecasting minus 2.8% GDP. That is for one quarter. We have to get 2 consecutive quarters of negative GDP to have a recession. The problem is, that's after the fact. We could be in a recession right now. Now LBC got me worried. Elon better not pull a wild card with Doge with this stimmy. Actually, that would be very bullish. That's the thing, man. We are in such a data and news driven environment, but the data, the economics is so bleak, as I had in the title yesterday, that even good news isn't helping. So the news, you might get it's got to be a pretty big announcement. You saw today, we get the announcement of $100 billion investment for chips, but NVIDIA tanks at the same time. So even that didn't pump the market. Something as massive as a crypto reserve pumped the markets for a day, and that's it. We washed away all the gains today. All of them. $300 billion in market cap wiped out. Yay. And this is Trump's presidency. It's probably going to be volatile for the next 4 years. We said that last night too. But it's a trader's dream. It's a trader's dream. The problem is spot bags. I mean, you just got to hold them, I guess. I don't know. I don't like DCAing right now. I just don't. For me, it would be like be in cash and do short-term trades. And maybe hold some Bitcoin. But that's me personally. And if you've already been holding and you're still in profit, because you've been holding for years, I mean, if you want to just know that you might be holding for even longer. But But if you can withstand that and you just want to keep buying, you pour your heart out. I mean, do everything. Do what you do, you boo boo. Do you. Okay? Do you boo boo. All right, so a little bit on the good side. So we haven't looked at the Velo chart actually in quite some time here on the show. So I want to taking a look here at the open interest. Where I think is it this one? Yeah. And we can see. So let's see. This is kind of like our. So this was our open interest low, or our price level low here. Open interest level low was here, and you got a bullish divergence off of that. Let's see, but we're just gonna take this range right down here. We're gonna pull this across, and we can see that we are right in that range on our open interest. And because of this little pump it up, and I was looking at this yesterday, and I was like, man, that's crazy that this move right here actually created a positive open interest, which I figured this was just liquidating shorts. But apparently not. Apparently not. I mean, we did get some wicks on both sides here. But it looks like the open interest, I mean, whatever longs were left just died. If people went long, they're out of them now. Most of them. Most people are out of their longs now. But we are kind of back at our baseline on our open interest. For those that don't know, your open interest is the combination of all the longs and shorts in the market. So these are your open leveraged positions, both long and short. So the green candles are just positive open interest. It just means that there's longs and shorts, okay? A bunch of them. Or opening, yeah. And the red means they're closing. Now, you open them how you open them, but you close them in a couple different ways. You either get liquidated, or you just manually close it yourself because you see that the price is going against you, and so you just close it. Or you hit your stop loss. There we go. So there we go. Same, I want to sell everything and just trade. I mean, I pretty much did that like a year and a half ago. I stopped holding anything other than Bitcoin. I don't like it. I don't like holding altcoins. Not only that, nobody can say I'll shill anything, shill my bags, because I don't have any. What am I, shilling my cash? I don't care. To me, it's not worth the risk. I'd rather invest in like stocks or something, even though it's more long term. Who cares? Like, who cares? Just not worth the risk for me personally. If you can do it, do you? It's just for me personally and my comfort level and my risk tolerance. Nah, fam. I'm good. I'd rather just trade cash and buy Bitcoin. That's what I want to do, and that's what I'm going to keep doing. Trade cash and buy Bitcoin. Let's see. So, oh yeah. So our open interest is back to our 6-month range low here. Okay. And if we come back and we pull this back all the way over here, yeah, we'll just use this as our baseline. I mean, we can see that this nice liquidation flush here is what led to this bigger push up here. But we can also see that these are, what marks. I wish I could okay. This is what marks bottoms typically, is us getting back down to our baseline on our open interest, which is where we are now. So Come on, Bitcoin. Come on, Bitcoin. Now, it typically bottoms out before it puts in the next low. Okay, so we've got to be mindful of that. So it bottomed out here, over here, and that was before it put in the next low. Okay. But that creates an open interest bullish divergence. If you get an open interest bullish divergence, especially on a 12-hour, that's going to be pretty significant. Over here, same thing. Bang, bang, right there. You get the lower low, and then you get the trending up open interest, and then you get the pop. And you go to the upside, and then you got to get out. And then you got to get out. You're coming back to the highs anyway, so you should be taking profit. If you just trade supply and demand, highs and lows, you can kill it in this game, man. It is good. I mean, I don't want to say it's easy, because it ain't easy. It ain't easy being squeezy or something. Let's come over here to Bitcoin chart. Let's get rid of all indicators. Let's get rid of these previous drawings, and let's just go. All right, so let's just say, all right, we've come up, we've come down. Now, immediately when I see this move right here, I want to take in my high to my first low, and I want to pull that across, and then I will expect some price reaction off of that. Actually, there we go. High to low, high to low. We can also just take our highs, which would have been smarter. Just take your highs. What I like to do is I like to take that last candle. The last freaking candle right there. Just take the highs and lows on that one. Look at that. If you would have played short anytime you broken above that, look at that. You're making money. You come back up to it, go short, bang. Come back up to it. It didn't quite get there. Maybe you can hop in it. Short. Good. And then you come back up to it. Wrecked. But that's okay, because hopefully you're putting in a stop loss, and that just means that you made you profited on 1, 2, 3, 4 trades potentially before taking one loss. Okay? Come back down. Don't know if I would have gone long here, but maybe I would have gone long here. Wrecked. All right, well, dang, what am I looking for now? Oh, I just want to see some support. I want to see some support come in. So I'm going to be marking off both my highs and my lows. Highs, lows. Okay. We actually came right back down to that one. Look at that. Last candle, like I said, last candle. Look at where price comes back down to over here. Comes back down to that last candle. This is a 4-hour chart. But it comes back down to that last 4-hour candle before the move to the upside. I mean, just absolutely nails it. I don't make the rules. I don't even know who does make the rules. Now, I can't take this last one because why? Because it's not small. If I take the bearish one, yeah, I can make a play off of that. Last candle. Another last candle here. Looks like we fall straight through this one, though. But that's the thing. How many times have we bounced or rejected off of the last candle? And how many times can you make a play off of that? And if you use proper risk management, you're not, 1% per trade. you can hit these bounces and just hop in and out and be good. You're good. Don't round trip, but you're good. Just take the last candle on your 4-hour chart and try to play off of that on each high on the swing levels. Last candle at the top. Swing it across. There you go. Bang, 1. Bang, 2. This one might get you liquidated, or not liquidated, but stopped out. That's okay. Come back up, bang. Another one. So right now, 3 out of 4. Right back up. And this one pushes down hard too. 4 out of 5. 5 out of 6. All the way down here. Let's keep going. 7 out of 8. I mean, how many times could you have played off just of this candle here? How many times could you have played off of that? Several times. And only losing once if you put your stop at the high. Only losing once. Lose 1%. Make bukus of other percentages when you hit. You can try to do, now the question is, well, where do I, set my targets at? There's different things that you can do or go for. Typically you want to go for like a low that's sitting on the inside of a range, or in this instance, we come back down into a fair value gap. So a fair value gap is going to be a point of interest. In this instance, hard to say on this one. I would say look out. Yep, look. Bullish divergence. That's kind of going to be your first sign that, okay, maybe I should get out. Okay. Not only that, I mean, if you're jumping in here and you're writing it down for, a day and a half, 2 days, maybe it's time to get out of that trade. I'm just saying. But you can also play it on very short-term time frames. Make these intraday trades. What time is this one? At 3 p.m. So 3 p.m. till the Asia open. Nope. Until 11 p.m. So that, and this is, well, the candle starts at 11, which means it stops at 3 a.m. Yeah, so you're already out of the trade because you should be in bed anyway. Okay? Don't hold that trade open overnight. Or you can do a trailing stop loss, which is probably going to be your best option. Is going to be the trailing stop loss. Let the trailing stop loss do the work for you. I heard we were getting a little bit of a pump. Maybe. Last little move. Last little candle. Tiny itty bitty candle. Before we broke down. Didn't get up to it. Dang. The whole range though? Oh, we got up right up to that range. And that's another thing that you can take is ranges. But that'll be for another... Oh, wait. I've got a question that I must answer now, but I'm about to go to sleep, or I'm about to go. Question LBC: if a coin is making higher highs and higher lows and about to reach major key level high, can the price go higher and break resistance, continuing the higher highs? Well, of course. Of course it can. It depends on your major key level, but I mean, yeah. But that's the point. The point is, even though it can break that high, you still put in the trade, the short, and you put in your stop loss, your 1% of your account, and you just see if it plays out. If it doesn't, and it continues higher, fine. But there's also ways that you can swing trade shorts and long, or you can be like in a long-term long, right? And you can just hold that long open on low leverage. Highly recommend the low leverage on if you're holding for a long time, and just scalp short as it's moving to the upside. Scalp the highs. If it's coming up to a high, short. Take some of those profits, put it to the side, or use it for another short, or put it to the side and wait for a dip to buy or to add to your long position. Trailing stop loss. That way you don't miss out on a whole bunch of gains or profit. You have your trailing stop loss as you are scalping the shorts as your long is moving to the upside. So that's a little bit more for people that have way more time on their hands for trading. I do not recommend, probably don't recommend doing that if you have a day job of any kind. But anyways, I think I'm gonna go ahead and end it there because past my time. But I hope you got something out of tonight's stream. I know we didn't really look at too much of anything other than Bitcoin, even though I did mention stocks. Stocks were down quite a bit today. Not good. Great answer. I'm just thinking about all the people that were shorting when price was at all-time high. Then price continued to make multiple highs several times a week. I'd have to see exactly what you're saying there. Trade intuition. Mr. Joe, thank you for being here, Joe. Throw some bingo bangos in the chat for Joe. Throw some mod queen emojis in the chat as well. Let's see. We got the bingo bangos. We got the mod queens. Throw those in the chat. Oh, yeah. So yeah, I'm not entirely sure. Let's see. I'm just thinking about all the people that were shorting when price was at all-time high. Who was shorting when price was at all-time high is the question. And the price kept, well, if it kept making higher highs, I mean, you do want to be best. Okay, I think I see what you're getting at, Joe. You do want to see a sign of weakness first, which would just be, I'll go over to the chart really quick. You do want to see some sign of weakness first before you, like, this moving down and then coming back up. Okay, this is going to be a major level that I want to short from because we came down and then we came back up. It's not a continuation, right? It's more of a, okay, this is kind of looking, this is looking sketch up in here, right? This is looking weak. Everything's looking weak. I kind of want to short. My bias is going to be short. If everything's looking strong, then my bias is going to be long. I can't keep doing the rhyming. I said we would do the moon chant tonight, but I don't want to bug the moon gods. I'm going to make you wait another night. You're going to have to deal with it. You're going to have to deal with it. I love you all, but I gotta go. I gotta go to bed. But I do appreciate each and every single last one of you for being here. Thank you as always for all the love and support. Don't forget to hit that like button on your way out. Subscribe to the channel if you are new. If you learned anything today, join the Piper Academy Discord. The link is pinned in the chat. If you are watching this back, it is in the description down below. Don't forget to check out our affiliate links. We do have the Blowfin exchange. We have the NordVPN 15 or 74% off your first 15 months. We've got And Chart Prime. Check out Chart Prime, 45% off of your first month. Chart Prime not only comes with an indicator package, but it also comes with live classes 5 times a week with your very own Alex O Crypto and OC Guy. So you get to learn from some of the best in the industry. So check it out, Chart Prime, in the link just down below. But thank you guys. I hope to see you all tomorrow. Don't forget, we do have Billy Goat Tales tomorrow night on X. Check that out at Billy Goat Tales, Tales. Crypto Billy and Gang. Crypto Pollo was in here earlier. Cluck, cluck. And yeah, I'm not sure what tomorrow's Billy Goat Tales is about, but go ahead and check that out at 9 p.m. Eastern Standard Time over there on X. Other than that, we'll be back here tomorrow for 4 shows with Good Morning Crypto, BC Port Corp at 7 a.m. Eastern Standard Time, followed by OC Guy on the Morning Market Report at 10 a.m. At 4, we'll have Trade Intuition Joe, and then we'll be right back here for more Markets After Dark, where we go mad on the charts. Thank you all. I hope you all have an amazing, beautiful, wonderful, radical sleep, and I will see you all tomorrow. Mad love. Peace out. Good night.
Welcome to the night where we light up the spark. We're trading crypto, find out you'll be mad on the charts. Hosted by the one Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, I shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trend, see future in sight. It's markets after dark, live financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark where only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. On the charts with Lunar's bright light. Crypto markets soaring through the night. From Bitcoin markets soaring fast. Markets after dark, I shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar